With 4 stars of liquidity and a moderately positive correlation to the SPY, IWM represents another opportunity for us to collect some credit using our third iron condor in a probably month and a half. So if you're interested in putting on another short premium, short iron condor, then this is the trade for you. Hi everybody, Neil here with Option Theory. It is July 2nd, 2020. We're putting our cherry bomb trade on. For those of you that are new here, thanks so much for giving us a try. For those of the returning subscribers, I appreciate your loyalty and that you watch these videos and give me those likes. I really appreciate it. So we're going to build out our trade today. We're going to take a look at the chart here for IWM, and we can see we've been in a range, and we're going to throw on an iron condor here. So head over to that Analyze tab. Of course, we're in simulated trading, right? Because we're learning how to, we're testing our theories, or learning, if that's also the way I look at it, to trade options and ThinkOrSwim here, but we're doing it in a simulated environment. So heading over to this Add a Simulated Trade, we're going to open up the August 7th weeklies with 36 days to expiration. On the put side, you can do this on the call side if you like, but I don't know why, I'm a put guy. Kind of a Dr. Seuss moment right there. So over here on the 127s, I right click anywhere and you would choose Analyze a Sell Trade, and we would do Iron Condor. And that'll build you out a $1 wide Iron Condor down here, right? In your positions and simulated trades. So these are the strikes that you want to go for. For your top line, you're going to see your short call, and this might say -10 for you. If that's the case, then you need to ask yourself if that's the right size for you. For me, I've changed the settings to be default to 1 contract. I've done a video on how to do this. I'll put a card up above for you to go ahead and watch that and see how to change these default numbers. But your short call should be at the 155 strike. Your long call should be 157. That protects you. That defines your upside risk to $200 or $2 per share. Your short put should be at the $127 strike, and your long put, which protects you to the downside, right, or I should say limits your risk to the downside, to $200. Now, of course, you collect a credit for doing this, which is working out to the tasty trade mechanics or tasty trade approach of 1/3 the width. So we can, of course, always understand our maximum loss and our maximum profit easily and visually by heading over to that risk profile, right? So make sure once you click on risk profile, and you've got this down in here, and this box is checked off, you set your date to the expiration. So when's expiration? You can see it right here, 8/8. I set mine to 8/7, but let's, for ha-has, set it to August 8th. Doesn't really change much. I said this again in yesterday's video, which, by the way, yesterday's video, which I'll link to right here up above, is did not fill for me. I don't know if it filled for you guys, if you gave it a try. It did not fill, but I had said this also. All right. So we can see here sort of the expected move in that time, and our Iron Condor takes up, the break-evens take up most of that space. That gives us a probability of what Tastyworks calls probability of profit, right? I call it probability of breaking even or better, 60% here in this case. And we can also see that our Iron Condor is not exactly centered. So this would be a slightly bearish position. You can see that we would benefit not much, but if it came into center more. Another thing to note, I want to point this out here, is that Russell futures are up, right? And it is that's what, moderately correlated correlation. So this one often goes up when the S&P goes up, and this is up as well. So maybe you wait for the opening bell to put this trade on. It seems to me it's not likely that we're going to get the credit that we want to get here, and also we're not really centered. But I'm okay with the fact that, hey, look, I can trade in the morning before work starts, right? And then maybe check at lunch, that kind of a thing. So with that said, we can see our maximum possible profit here is $65, right? And our maximum loss would be $135. That's the width of the strikes minus our credit received. And the probability, what we want to do if you're following the tasty trade approach here, is to collect our profits when we get near that 50% mark, right? So if we get to about $32.50 in profit, that's when we would be looking to collect it. And the previous two IWM iron condors have worked out great for us. One of them we collected 100% of the profit. The other one was a little bit more than 50. So I would say if we just wanted to take a quick look, if there's something you wanted to see here, we wanted to look at IWM. We're up $102 so far for the year on IWM. So that's good. All right, everybody, I'm going to right click on this trade. I'm going to choose confirm and send. Everything I just said here about max profit and max loss is recapped for you here. I'm going to hit send. That's going to place that over into my working orders. That's trade history. We're looking at working orders. That's because I was over here at activity and positions. All right, sometimes it's easy to get a little confused. All right, everybody. So if you like this kind of thing, would you mind doing me a favor? I hope I've earned your like. Would you consider smashing that like button for me? And hit the subscribe and ring that bell if this is something that you'd like to do with us on your own too. Get yourself this ThinkOrSwim platform and start paper trading with us, or real trading if you're ready to step up. But of course, this is for educational purposes. All right, everybody. Thanks so much for tuning in, and I look forward to seeing you in tomorrow's final cherry bomb of the week.